Good morning, everybody. This is John Seville from Acorn Wealth Corp, and this is your executive summary as we head into the Monday markets of a new week. Now, obviously, a very, very important couple of days ahead. Basically, what we've been talking about over these last few days is the open range, of course, of October, and how we basically closed right at the top of what we felt was going to be a head and shoulders essentially that was going to build around this area. I was going to magnify this up a little bit for you. Let me get some of these lines off for you as well. So basically here you go. You can see this downward movement, this possible head and shoulders, and we just kind of cracked through that. We were hoping it would come up and tag the 1940 to 1942 area. Now we have gone higher than that and filled higher than that lower type of head and shoulders. Now that doesn't mean, however, that the head and shoulders isn't still there. We'll just take these again. I'll just simplify this up a little bit. Take the Bollinger Band off. There we go. All right, so what we could still be dealing with here, though, is just simply a higher shoulder. And if you see, if we go and look at this measurement there, there's a possibility of that higher neckline going off of the shoulder of this level versus what we were looking at on the lower end. So that's one thing to be aware of, is that this may not have been the left shoulder. In fact, we could be getting more of a measurement of up to there using the parallel line from the one on the bottom. That's the first theory. Of course, we've got the 38.2% Fibonacci in right above it as well. So right now, we've had massive amounts of volatility after a very disappointing job level. Of course, the high-frequency trading kicked in and bought the support and triggered probably a lot of short covering. Now, this is an outside day with a higher high and lower low, so it's what's considered a directionless day, but of course a very strong close right at the top. Now, currently, the overseas markets are rallying, so of course reacting to the US market strength on Friday. And we've got basically, the U.S. market futures have been fairly unreacted. They've been mostly through the night. They've been going up by about 4 points, 5 points throughout the evening session. And basically, as we go into the open today, they're currently at about up 9 points, I believe, when I last checked. So we're looking from 1951 up into around this 1960 area. So where this possible head and shoulders could be. Now, or even just a tiny bit higher. But obviously, as we've seen, the futures don't indicate much. What we have to see is really tomorrow's action. That's going to tell us a lot about maybe where the market goes. Now, when I spoke to Strath earlier, he felt it was possible we could go higher here, but we'd be looking at. But still, is very confident. He feels that we're still got big problems that will hit the market by Tuesday or Wednesday at the latest. So, what does that tell us? What it tells us is that from a technical standpoint, looking purely at the chart, I would still be looking at this as a rally into resistance, and that we still have trouble coming, and that we're just seeing a kind of an aggressive short squeeze rally here. The one rule, of course, that goes against is the open range. So we have open range saying the market should continue going longer and close above 1930 by the end of next week. And then, of course, we have the charting pattern and the oscillating nature of it, saying that it should bounce down off of resistance. So this is why we've kind of got a very interesting next couple of days. We want to see, obviously, how this reacts. But right now, I wouldn't be chasing any new shorts myself. And really just using this next hour to let some more clarity come into the market. Now, some of the other things that obviously that I'm looking at that still show that there's a lot of problems is things like HYG. We look at the corporate high yield bonds as a signal of where the smart money's going. It still isn't going into high risk investments. It's still not going. It's still not chasing risk in the market and going into corporate high yield bonds. It's still going down. In fact, it's obviously made made new lows as the market's been rallying these last few days. So it certainly looks like the problem is still there, as reflected from the smart money. And of course, you can see a similar kind of pattern: TLT, or money going into the lower risk investments, still going up. Of course, corporate high yield bonds, excuse me, 20-year Treasury bonds have been rallying. So we're still seeing how smart money is going, and it's not screaming buy the market quite yet. Now, in terms of short-term trading opportunities, we'll look at a couple from. Well, actually, one of the ones I wanted to mention right off the bat is gold. Now, you remember on Thursday afternoon, Strath suggested that he was liking the what was it? The $70 March calls, which were currently at 275 at the time. Those have had a beautiful rally. I'm not sure if anyone was in those, but they closed at $4. So those are the $70 March calls. So this has started to move really well. And that was from Trading Room on Thursday. SSP, if anyone's trading that, this one looks like it could be also set for a rally. We should also have the money flow up here. There we go. I mean, this is massive divergence. I still like SSP, in around that 1750 mark as a rally, and I think that like a rally up towards this this level, or possibly even higher. This moving average is coming down and converging, and if it's able to get beyond that, this would be something I would use to hedge against the shorts. And of course, Elizabeth Arden. Has also been extremely good. It rallied up, it hit its resistance line, it's pulled back to support. If this can break through resistance above $12, this should also have an opportunity to have a really decent rally as well. So also one I'd be looking at as a hedge. Originally, one we spotted around 1050 as a rally up into resistance at around just above 1150. So to hit that first target, now I'd be waiting for the break through the next level. Okay. I've also looked at we've got a lot of shorts on the go, and I mean, just to name a few, one of the things that I really liked going through all of our positions tonight was before this morning's open was to see that a lot of them still look really solid. Like, I mean, and this is why we love using scans, because I mean, look at PII. The market's rallied up sharply over the last 2 days. Last 2 trading days. What's PII done? Nothing. And we hold the put positions in this. So this is why I'll take the odd speculative trade on the S&P 500. But the key thing is to make sure that your stocks are inherently weak and have great patterns themselves. Look at STX. Didn't break above its moving average. Over the last 2 days, this stock has made new lows and lower highs. STX going strong. NSR still didn't get any lift in its prices. In fact, it made a lower high and a lower low over the last 2 days, expanding in range, and that's a bearish signal. What else have we seen? We saw ACHC. Also one of the recent new shorts. This one's gone down over the last 2 days. It's looking like a bear flag. This one looks like it's about to have another nasty drop, which could be as great as that. But I mean, 59 is our immediate target. But this one looks superb too. CDK. Holding beneath resistance, looking like it's moving in a pennant formation, which of course at the moment is to the downside, or possibly, either way, a descending triangle. So despite the fact, the only real technical signal at the moment that is giving me the heebie-jeebies is the fact that we've broken above open range. But as we know, open range doesn't work 100% of the time. There will be failures, and this could be one. So right now, that's why we've got, when the stars aren't as aligned, I'm not rushing to take any new positions. I want to let the market kind of figure itself out, and let the stocks and option plays we have play out. So CDK is obviously one of the ones we're looking at, but we always want to be prepared with if the market suddenly starts to give us a lot of good bull trades, start looking at taking some profits. If you're feeling uneasy, I mean, there's some of the stocks that the shorts which have been well in the money in terms of profit. Already, but are starting to look potentially bullish, is Cree, which we talked about last week in Trading Room. I mean, this is just starting to, it's still trying to figure itself out. Hasn't made any new lows, hasn't made any new highs. It's pure consolidation. Again, I wouldn't be extremely concerned, but just a tip: if you are holding positions where you're up really nicely, or you gotten into them and you're not quite sure what to do, I mean, just remember, if you're ever completely nervous, just get out. But if you're just worried about missing profit, well, maybe sell half. Right? Why not? If you've got a 60, 70% profit, or a 3, 4, 500% profit on your options, then why not just sell half and take that off the table, and then of course and then you're out. Or another way to look at it, if you really want to be extremely bullish, is, let's say you are up 200, 300%, just sell whatever your original capital was. So if you put $1,000 in and you're up 3,000, well, take 1,000 out. Then you're guaranteed to not lose any money. And if, as long as you don't let it go all the way to zero at options expiration, you're guaranteed a profit. Right, so that's another strategy to look at. Sell half and protect a portion of your profit and capital, or get out of the option. Now, if this is a stock trade, it's much easier to manage. And you just how I would be trading something like this is by simply throwing a stop loss in. So if you're looking at this as a short-term trade, then I'd be looking at a stop loss just above where we're looking at here at 24.69. If you're looking for a longer term trade, I'd be actually where the risk versus reward may be a little bit more greater, then I'd be looking at the stop loss above the 20-day moving average, so at 25.50. Keeping in mind that this was one that we picked out originally as a break below 25.90. So even if you did get out at 25.50, you're still picking up a 40-cent profit. Not as nice as a $4 profit, but not a loss, and you are making money. So I mean those are worst case scenarios of how you protect if the market rallies. But again, a lot of that, this is maybe the most, one of the ones that looks like it could turn the most, I should say, and even that doesn't look that bad. It still hasn't made any bull advancements yet. It's just still sitting on its moving averages without a lift. So again, we'll see what happens tomorrow, or today, I should say. But those are kind of the ways that I'm looking at the market. Now, the other thing I would mention is there are a few stocks that I've been looking at as potential long watches. I'll share them with you. You can just add these to your watch list, but we'll obviously review these in Trading Room and keep an eye on these. FTAI, you can see this one's starting to gather some steam. And at this point, what we're looking for is stocks that have a really healthy money flow with good divergence and nice, strong, resilient patterns. So FTAI has that. ATI was another one. Now you can see on ATI, the stock's got very sharp recovery of its money flow as the stock has actually gone down. So the money flow has gone up significantly. The stock's dropped from 31 to 15, and the money flow has gone from negative 54 to negative 15. So really big divergence. So this is worth keeping your eye on. Again, a lot of these aren't ready yet. Some of them are very close to being ready. But these are the kind of things you want to look at, is not just capturing the crash, but also being ready for stocks that are bouncing, stocks that are having some recovery. And ATI could very well have some interesting action here. If it's able to overcome this resistance, it could have a clear run from around 18 up to 24. So there's one. Okay. Energy is also looking bullish. A lot of energy stocks coming up on the long scan. Helix Energy Solutions Group, for example, was one of those energy stocks that looks like it's just about ready to make a little bit of an attempt at a run. OREX. Oh, sorry, not this one. This is a speculative trade. We're just waiting for this one. This wasn't the one I thought it was, though. But yeah, this was also looking really quite exciting. If this can overcome its resistance, still not ready. But OREX also on the watch list. Very sharp money flow divergence. So anyhow, this just gives you an idea of making sure that you are building your preparedness. Because if the market does decide to go bullish for the next few weeks, so what? Let's switch. Let's make some money in that direction as well. Let's make sure you protect your profits on your short positions, and make some money on the longs in the meantime. That's the beauty of being a trader, is being able to quickly switch directions if we are confirmed that there's a short-term move happening like that. However, again, a lot of these short positions that we're in, we are just holding strong because we. Even though we've had a shift in the market in the last really only over 1 day, and that the only thing that's happened is it's broken open range. But we see a lot of other technical signals still saying short. Almost all the companies we're in are well in profit, well in the money, and are still sitting under their resistance lines, so they haven't given us any exit signal at all yet. So that's the good thing. And so really, anyway, my main point today is to leave you feeling that look, don't get fraternized by the market. Let's see what happens over the day. Manage your positions with your own risk strategy and your stop losses, just like you would any normal time. But this should be a very exciting week ahead. So do pay attention and log into Trading Room on Tuesday, where we're going to be having a very big breakdown of obviously from Strath and also from the technicals to look at what's shaping up. Okay, so that's a bit longer summary today, but hopefully it helps, and we'll see you all in the executive summary this afternoon. Take care, and happy trading.